Hey, what's up, guys? I want to talk about Nasdaq today because I think what's happening, with the Gamestop and these short squeezes and these gamma squeezes and these subreddits liquidating these billionaires, it's pretty ridiculous what's going on. And, you know, personally, I'm just gonna say it. I don't really care what you guys think, but I think this is probably gonna be really bad for the world. The fact that this stuff's getting exploited and these dominoes are starting to fall, but it's a step in the right direction for me because we talk about income inequality, we talk about transfer of wealth, we talk about how the middle class is getting killed. It's just being destroyed, and we're seeing this huge wealth transfer from the rich to the poor. Well, it's these hedge fund guys who have been getting free money, free taxpayer money. They have a printing press. They get bailed out for making risky decisions. Imagine, you having to pay for someone's gambling addiction. All they want to do is play roulette, and they're just gambling away $20, $30 at a time recklessly, and then you gotta give them money. You gotta feed the habit. That's basically what we're doing as people. We're feeding their addiction, their habit, while they reap all the benefits of, like when you're a gambler. I mean, there's two sides to it. You win, you enjoy, the fruits of what come, when you hit on your bet, but also you lose a lot of money. It destroys your life, like things like that. But for these guys, they don't have to worry about losing the money because it's not their money because someone else is paying for the gambling habit. So it's very fucking cool to see all these motherfuckers getting liquidated. I'll tell you that much. I'm enjoying it. I'm loving every second of it. Bunch of kids from a subreddit doing this. Ah, man, I love it. I love it. But anyways, want to dive into the charts. Want to compare, talk about Nasdaq in the 1990s to now because I've been studying this chart for a while. There are a lot of similarities, and a lot of you are wondering if we are in a bubble and where are we in this bubble. So I want to talk about that today just based off the charts. All right. And the disclaimer before I get into this is it is not financial advice. Do your own due diligence and speak to a financial advisor if you're thinking about making any type of investment decision. All right. I'm not a professional. I can be wrong. Take what I say with a grain of salt. All right. Um, but yeah, just sharing my opinion, my perspective, and I'm hoping that you guys build the tools to, be able to critically think through these types of questions and come to answers that will benefit you. I can't give you the answer because, the answer is different for everyone else. I know it's like, well, is the market going up or is it going down? Well, it depends, like it depends. How do you play the market? Do you buy shares for the long term? Do you do options? Um, do like everyone has a different strategy, and that really does affect your bottom line at the end of the day. So that's why investing is just, it is very complicated at the end of the day. There's people who bet against the market, they lose in the down market. They bet again, they bet aggressively in an up market, they just don't do it right and they lose out, like, so it's a tough question to answer, but hoping you guys can, like, at least you're able to use the technical analysis and add that perspective into like whatever other due diligence you do to come to those conclusions on whether you should be buying something or selling something, right? So yeah, it's all for fun, man. It's all fun and games, and we're just trying to figure it out together, right? So diving into it. So what I started doing, especially towards the latter half of 2020, was I started looking at the Nasdaq because I noticed that the strength that it saw after Corona happened was just ridiculous, and it got to the point where once it broke those previous highs from March 2020, it's pretty apparent that something was happening in this market. It was either recovering or something kind of crazy was about to unfold. And now we're kind of seeing, with these GameStop liquid, these short squeezes and these gamma squeezes, where everyday people have exploited this derivative based system that we're in, and it's kind of they're turning the tables on corporate America, really. So when you see this type of stuff going on, these are the catalyst for a bubble, and these are elements of bubbles. These are the elements you see in mega bubbles, blow off top moves, and this is what you see towards the end, in my opinion. But when does this end happen? Well, let's talk about the time frames. So with in 1990. So I've looked at a lot of different charts with a lot of different bubbles. I've looked at oil. I've done the Dow Jones in the 1920s. I've looked at Microsoft in the 90s. Looked at Tesla now. I've said oil, Japanese equity bubble. I've looked at a lot of different bubbles. And upon my analysis of what I have seen, I've noticed a very kind of basic structure of what you see. So when you look at a bubble, what happens is the first phase of the bubble is kind of like a slow grind up. And what happens is you slowly grind up between a channel, between two different lines in like kind of like a very orderly conduct way for extended period of time. This is probably the longest part, right? So you have this like extension, like in for the Nasdaq, the way I drew my lines, I'm not saying they're perfect, but I just kind of drew these lines just to give me a basis of like, all right, where's the price structure moving? So 92, it really started. This is where it really started kind of moving in this range, just slowly grinding up, and you saw a little up, a little down. And then what you see towards the end is the second phase to me of these bubbles, where like they begin to break out. And what happens is they break out. Nasdaq in this case broke out into another pattern. Its second phase, it starts breaking out and consolidating above a higher range, and you start to see more volatility as well. So here it's just kind of ranging. It has up period, down periods. Now it enters the second phase where the volatility really picks up. And for the Nasdaq, what happened was once it broke this megaphone pattern, which is these two lines that are going out in the opposite directions. Once you break out this megaphone pattern, you enter this third phase where you kind of consolidate above the range of the megaphone pattern. Then you go into your blow off top move. And this is like the structure you usually see. Like, in the Great Depression, it was more like, all of them, they're not exact same. Like oil, you saw, all right, it moved like this, and then it broke up, and then it just immediately broke up, consolidated for a few weeks, then it just blew off top for like 8 weeks. It was pretty quick. The Great Depression, you saw this orderly channel movement, then it moved up, it broke up out of the range, it kind of did this. I believe it did the megaphone again, and then it broke up and then consolidated before the blow off top. Very similar to this structure. It was over a 10-year period. And interestingly enough, when you think about Corona, and you're about to see it right now, what happened was in 98 we also had, I didn't realize this until I looked at the chart, but we had this 32% drawdown, and immediately we saw this huge bounce up. So in 98 we saw July, August, September, in about a 3-month period we saw this 32% drop. And like this is basic structure of the bubble. This was what happened in 98, blew off top. But now, let's look at today. Look, let's just start right here. We're moving in this orderly channel. We broke out, and look what we're doing now. We're in this kind of megaphone almost, where it's like, all right, we're here, and then this megaphone's forming. And what we saw right before the market really took off again was a 30% drawdown. It was in a few weeks, and it was a pretty crazy drop. But also keep in mind that our system zero interest rates, we print trillions of dollars, it's leveraged more than ever. You're going to see volatility, you're going to see it faster. There's algorithmic, just computerized trading. I mean, this stuff can collapse instantly. That's why they have these trade breakers where if you gap down, the trading's halted, right? It's to prevent this like algo crash, this pyramid of leverage, just this pyramid of just money just collapsing. It's you're going to see the volatility. So we saw that 30% drawdown, and then we saw just a huge rally. And if you look at where we are at in this bubble, we were in phase one for a lot longer than it was, about almost 10 years of phase one. And then we broke up, and then we had about 3 years in phase two where we went to this megaphone pattern. So this has been a lot longer than the 1990 bubble. And the general assumption is the quicker the structure happens, like oil, it went in this orderly channel for like 4 to 6 years, and then it broke up and it consolidated for like maybe 8 weeks, and then it had a parabolic move for 4 weeks. It was very quick. 98, we kind of saw like 92 to about 99, about 7 years, we consolidated. I mean, not even 7 years, for like 6 years, we consolidated in this range. Then we broke out. Then we had the megaphone pattern for about 1, 2 years, and then we had that blow off top, which lasted about a year. So here we're seeing like an extended time period. So, the assumption has to be that this bubble will probably be much larger than 98. And I think there's like a fundamental basis behind it. There's leverage, there's more money printing, there's more access to capital. And look at these, you got everyone participating in this now, and more people are coming in. So the Feds wanted to create inflation, and that's what they're doing. So we entered this megaphone pattern, had that huge shakeout, and it seems like we finally started to exit phase two and go into this blow off top phase. So we broke this megaphone pattern. Now we're consolidating above. To me, in the short term, not saying I'm the best short term trader, but on the weekly, I'm just kind of seeing this resistance. I'm seeing how this is reacting. This was a line I was watching. I think it's possible that we do consolidate. And, when Nasdaq in 98 was consolidating above this range, it was seeing about 10-15% corrections each time around. So, given the volatility, given how fast we went to 30% here, I definitely think a 20% correction is possible. Like, we see a lot more volatility. This has also gone a lot higher than in 98, so 30% was pretty significant. I mean, in percentage terms, it's all relevant, but that 30% move was quite significant for Nasdaq. It hadn't seen that type of volatility, whereas we've kind of seen a lot more of that. I mean, we had a 25% drawdown in 2018. So percentage terms wise, we're seeing that volatility for a reason. And during this consolidation period where Nasdaq in the 90s was correcting 10 to 15%, I think it's possible that we see just a lot heavier dips because of that volatility and that risk of having a margin call. So I think it's possible that we do have like some kind of 20% drawdown, and we bounce off this line at least one more time, and then we start taking off again, and then eventually we break that line and we start to go parabolic. Depending on how long this consolidation is in this period, I think will ultimately determine how long this bubble is. And I do think this consolidation period is going to be longer than the one in 98. I believe in 98 what happened was it was a 9-month period, and for the first 6 months it kind of consolidated in the range. I have the chart right here. Why not just look at it? So yeah, January to okay, so for a 9-month period, what happened was we about a 10-month period, if you think about it. It was January 4th to 11-month period. Sorry about that. So 11-month period we consolidated, and from December to March, 4-month period, Well, actually, if it broke November 8th, then that means it was 10 months. And then from November to March, that was 5 months. So, yeah, okay, I remember. My bad, guys. But you had this, this 10 month, 11-month consolidation. Then you see a parabolic move for 5 months afterwards. And, depending on how long that consolidation is, I think once we break this line, this is where we could begin to say, like, okay, this is where the parabolic advance begins. I think it will be roughly half as long. It will be half the time of this consolidation. So if we consolidate, I wouldn't even be surprised if we consolidate for about a year and then we really start taking off in 2022. We see this swing right here, then we get some upside to like 15,000, and then maybe we go down again to like 12, or even touch this line one more time, and boom, once we break this line, I think we could really start to say, like, all right, we're going parabolic now. So this move started in July. It's only been 6 months, so if this goes on for a year and a half, it's possible that we have a 9 month blow off top move, which is very unfathomable. It's hard to process having a move like that. So it depends on the consolidation. I don't really know, but that's something I'm looking at when judging where this bubble could potentially end, because I think this is where it gets really fun. This consolidation, once it breaks, we know that um, it should be roughly half the distance, because oil consolidated for like 8 weeks and then had blow off top for 4. Uh, Great Depression was kind of hard. Japanese equity bubble was actually just stayed in the slope. It didn't really advance into anything like like a bubble. But the thing was that slope was very steep, so it was growing at a very fast rate in an orderly fashion. And the Japanese fundamentally they began raising the interest rates during the last 2 years of that bubble, and they didn't allow it to press any further, and it just kind of collapsed. And then they did the QE, didn't work. Deflation, housing prices went down for 30 years. You guys know the story. Will that happen again here? I don't know. I mean, we have this printing press. We're a reserve currency. I think we're kind of losing that stranglehold. Who knows what's going to happen? So remember, we don't know what's going to happen. We can make theories. We ultimately don't know. But depending on this consolidation, and based on what we're seeing, it does seem like we're entering this final phase of this mega bubble, which could last, another year, 2 years. Who knows? If this is the mother of all bubbles, this could go on for 4 or 5 years, no idea. We could go into a roaring 20 period where we just kind of base into another range. And, I think we'll have a better idea towards the latter half of Biden's presidency, like what's going to happen with this market. If it's surging, past 2022, I think there's a lot more upside. So I play a lot of time cycles. So I like to think in increments of time, like, all right, where's the price going to be at in certain time in the future? And I think that really does help when you combine this technical analysis with what's happening fundamentally. Maybe the Fed start raising interest rates, 2 years, 3 years from now. We're having interest rate hikes and inflation's really picking up. I think that's a catalyst for the bubble popping. I think the big catalyst is going to be, when do the Feds stop playing the music? That's something you want to pay attention to. When do they start raising the rates? When do they stop bailing out these companies? When do they say, we're not going to put new liquidity into the system, and the margins pretty much maxed out? That's where we start seeing that things kind of start collapsing, and we'll see a collapse eventually, whether it's because the interest rates rise or there's a deflationary collapse. We're going to see it one way or the other. Um, but yeah, man, that's my thoughts. Based on what's going on, I know it sounds crazy and it sounds like this is how markets collapse, like Lehman Brothers, or what was it, long-term capital management in the 90s. Like these companies, they can put the world to a halt. And is it possible Gamestop does? Yes, it absolutely is. But this is also the elements you see towards the beginning too. People speculating and money entering, and we're still printing money, and our interest rates are pretty low. And we have a much more volatile system. We have a lot of margin, but we're also, it seems like we're still early in this final phase of this bubble. So yeah, that's my thoughts on Nasdaq, and I think it definitely is a bubble. I definitely think this could go a lot higher and really shock people. Like imagine seeing 100% move in the back half of 2021, 2022. I think that will be very, very interesting to see. So, at some point I'm gonna think about, where time trying to buy some puts at the potential top. So I'm really excited about those videos. I think once this structure breaks, we're gonna really have a better idea of where this top could potentially be. And I'm really excited to share that analysis. That's probably a few months away until we see things unfold. So if you like the content and you want to see us do the analysis, try to call the market top of this mega bubble, I think that's going to be something fun to do. We're going to take some nice calculated guesses. Subscribe to the page, like the content, man. And I really appreciate all you guys. And you guys have a good one. If you want any other content or you want to see charts for anything else, we'll be covering Bitcoin again. I'll actually make an updated video on Bitcoin. I think it does look kind of weak, so I'll talk about that in another video. But any other content you want, dude, leave a comment down below. I'm a big gold bug. I don't think I've done a gold video yet. I had an old one up and I took it down. But I'll definitely do a gold video. And yeah, you let me know if there's anything else you guys want to see. You guys have a good night, and until next time.